Choice of entity, after-tax cash flow, problem 1. Mr. and Mrs. Orange and their 2 children, Clementine and Tangerine, are the 4 equal partners in Citrus Partnership. This year, Citrus Partnership generated $40,000 of ordinary income. Compute the tax costs associated with this income if Mr. and Mrs. Orange's marginal tax rate is 35%, Clementine's marginal rate is 24%, and Tangerine's marginal tax rate is 32%. This question is super easy and straightforward, but extremely important because this happens a lot when you look at partnerships, S corporations. The idea is that, especially partnerships, family limited partnerships are a big deal, but even S corporations, you could have a family business as an S corporation, and you might be considering giving some of your stock to one of your family members. And the idea is you got to think about what the tax costs are going to be to all the parties involved. And there's going to be another problem we're going to do, look at shifting of taxes, or the effect of taxes when you shift your income to lower brackets through family limited partnerships, and this kind of sets it up for that to keep in mind. Of course, we're dealing with after-tax cash flow, so the ultimate question here is, what is the tax cost, the ultimate tax cost? So just calculate the tax costs of all 4 of these owners. Specifically, we have Mr. and Mrs. Orange, which are married filing joint, and then we've got Clementine, and then we have Tangerine. Those are 4 owners. They're 4 equal partners. 4 equal partners. So let's start by calculating Mr. and Mrs. Orange, and all we're going to do is we're going to take this $40,000 of ordinary income generated, multiply by their tax rates, and multiply by their ownership percentages, and that's really all we're doing. Or I should reverse that. $40,000 times their ownership percentage, because they get that share of the ordinary income allocated to them on their Schedule K-1, and then we just calculate the tax that way. So we're going to start first with Mr. and Mrs. Orange. Now, Mr. and Mrs. Orange, it looks like are filing a joint tax return. Nothing tells us differently. We're just told they have a 35% tax rate, so that's fine. That's fine. So Mr. and Mrs. Orange, collectively together, because these are 2 owners, 2 of the 4. So we have 4 owners, and 2 of the 4, and everyone owns equal ownership. So 2 out of 4 equals 50%. So 50% times the $40,000 of income that needs to be allocated, jumped the gun there, allocated, that's the $40,000, that's going to be $20,000. So $20,000 goes to Mr. and Mrs. Orange. We then are going to multiply that amount, that $20,000 times 35%. So $20,000 times 35%, that's going to be $7,000. $7,000. Okay, let's move on now to Clementine. So we finished Mr. and Mrs. Orange, and again, the end answer is just to add up the sum of all 4 owners, and that we just did 2 of them, right? 2 of the 4 owners, right? 2 of the 4. Now we're moving on to Clementine. So Clementine is the next owner. Clementine is one owner out of 4 because they're equal owners. So that's 25%. So 25% times the $40,000. That's allocated. Again, we're told in the problem $40,000. So I can just put here's the ownership percentage. I'll just label these for you. Ownership percentage. Here's our income to allocate. Total from the partnership, right? Our partnership income to allocate. This is our allocated income based on the partner. We'll just say partners allocated income. This is the tax rate. And this is their tax. This is the partner's tax. And the question is asking what's the total amount of tax costs when you consider all the partners together. So we have 25% ownership because Clementine is 1 owner out of 4 total. $40,000 that we're allocating. So we're allocating $10,000. And then we're going to multiply that by Clementine's tax rate, which is 24%. So that's going to be $2,400. $2,400. Simple calculation. And finally, we have 1 partner left, Tangerine. So Tangerine is going to be a similar calculation to Clementine. The only difference is going to be the tax rate. So Tangerine is 1 person out of 4, equal partners, 25%, times the $40,000 partnership income to be allocated. I keep saying that. I like to jump the gun there. Sorry. $10,000 allocated to Tangerine goes on Tangerine's Schedule K-1. So we report $40,000 on the 1065 for the partnership, and then on the K-1 to the respective partners, only 10,000 gets shown to Tangerine, that's going to flow through to Tangerine on Tangerine's Form 1040 if Tangerine's an individual, which it looks like Tangerine is here because they're all parents and children. Tangerine's rate is 32%. That's what changes. And then that's going to be $3,200. So when we add all these numbers together, we're going to get $12,600 of total tax cost. Total tax cost. So that's all we're doing here. We're just calculating what is the total tax cost when you consider all four partners in this question. That's all we're asking. This is going to be important, of course, when you're thinking about partnership, how to break up things. And it'll be even more important when we look at later problems where we're shifting income with a family limited partnership where we have two partners, let's say that are husband and wife, that want to maybe give some ownership to their children, which are in lower brackets, which potentially could save in taxes, and what the effect of that is.